Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to do another daily technical analysis update of commodities. We're going to work our way through dollar yields, precious metals, and commodities and ETFs that we follow or I follow. If you guys need any help with anything, check out finding-value.com. We still have a discount called Discount going on. It's not as big as the last one, but I will throw in randomly some discounts as I go on throughout the month. I'm going to look ahead and see which days I'll do it. It'll be a 50% discount on the first month, and it will only run for a certain period of time. So you're going to have to listen in to get those discounts if you want that discount. And I'm only going to post it for that day after I do the video. We do have a question and answer session coming up. It's this weekend at 7 a.m. on Saturday. So that's the next question and answer session that we have coming up. So let's dive in. Let's take a look and see what's going on with the markets. So yesterday we were talking about the potential of this either breaking higher or breaking lower, depending on what yields would do. Well, yields shot higher today. The 10-year and 30-year continued to look very strong. And the 2-year did follow suit. So we've broken back through that support resistance area. Support coming back down now and resistance as it blew up through that. Yields still look strong, so it makes me think that the dollar could continue higher. Yields going up the way that they are holding everything back. We can go and look at all these different sectors, and I'll make my opinions about the sectors and how yields are impacting them. So the 2-year yield, we're up a little bit today on the 2-year. The way that I view this is people are preferring the short end of the curve over the long end. They're more willing to take a shorter bond, get the yield where it's at, and flip it more quickly than over at the long end, which is being sold off. Again, this does not look like ultimate strength. I don't see a huge, big candlestick where it's like, wow, this is definitely going higher. It seems to me that there's a little bit of a battle going back and forth and that people are still accumulating the 2-year bond. On the other end of the spectrum, on the 10-year, this looks like it's getting sold off and yields are rising. This does look like it's going to continue to the upside. It looks ultra strong. There we are in the weekly candlesticks, and we could see a big move in the 10-year yield to the upside. What does that mean? I think it means more inflation is coming. I think the bond market is selling off on the long end of the curve, the 10-year, the 30-year. And it means higher mortgage rates. And I know that seems weird, but that's what the market is telling me. I'm also seeing strength in the home builders, which means that the home builders aren't going down, even with the strength in yield. So strong 10-year yield. We've got a strong 30-year yield as well. Look at this thing going up. To me, this looks like it's ready to rocket to the upside. So long end of the curve definitely looks strong to go higher. And on the short end of the curve, we are higher, but it's not as strong as the long end. So that's what we're seeing, and the dollar was obviously stronger today. We've got TYX-TNX ratio. This ratio has fallen today, which means that the short end of the curve went up more than the long end. And we're still inverting the curve to some degree. The thing is, we are very low in this area here. We've broken the downtrend line. That's right here. We've done a retest right there. We've been moving sideways the past few weeks, and this still looks like it could go higher, which means that the curve could still uninvert. What does that mean? Precious metals likes the curve going higher, which means that the curve is uninverting. It likes this. It does not like it when it inverts. So we're still inverting to a small degree, but it looks to me, when looking at this, that we could either go sideways, bouncing, back and forth, or we could go higher and move on up. So I think the curve could uninvert at some point putting a good tailwind behind precious metals. It hasn't done that yet. And I think gold is waiting for that to occur. So we can look at the charts at gold and I'll show you what I mean there. The 20-year bond price is breaking to the downside and we're getting some more acceleration. Here it is. We've got the kind of the flag pattern and it broke to the downside. If yields continue higher, this will continue lower for bond prices. So that is what the current take is on yields and bond prices. So bond prices, at least the long end, 20-year, looks like we could go lower and yields to go higher. Now, gold doesn't like higher yields. And we're heading lower today. We're down $21 an ounce. We've had these strong couple of days in that circle there. This one here and that one there are a couple of days where we had yields really move higher. Yields weren't moving higher here, and then we got slammed in the face over here with higher yields. We're not breaking any patterns here. We're just going sideways at the moment. We've got good support down here at about 1913, 1905, somewhere in that range. So hopefully what happens is we go sideways here, just the same as what the curve is doing. The curve could go, it could uninvert or go sideways, and I think the price will go sideways here. That's my guess. Again, that's a guess. That's not a prediction. Silver's also doing the same thing. You can see that we're going sideways in the price. See how the selling pressure is here? We've got good buying pressure coming in, small selling pressure coming down. It makes me think that this is waiting for the correct market condition to rip to the upside. So gold looks like it's just pausing. Silver looks like it's pausing, but it's not necessarily ready to rip to the downside. If it were ready to rip to the downside, what we would see is a big elongated down candlestick, showing us that sellers do not want the metal. I'm not seeing that in this price. What I'm seeing is strength. You can see these small little 3 down weeks. Here's the monthly. We've broken the monthly, and on the monthly candlestick right now we've got a bloody nose, but that could change. It depends on yields, depends what silver does over the next few weeks. Platinum also heading a little bit lower today, but it's not getting completely sold off. See how we've got little wicks on the bottom here? If this was gigantic selling pressure, you would definitely hit at the bottom here. But we still have some buying pressure. We still have some hope, some faith, whatever it is, that we can go higher. There's some buyers down here. XAU to gold ratio, we got hit today, down 2.5%. Gold and silver mining companies getting hit. That's today. Overall, though, we still have a large bullish engulfing, and the selling pressure has been weaker than July 23. So this week here in July 23 was a big up week, a lot of accumulation. So to me, the way that this looks like is that we are just moving sideways, probably consolidating and waiting for the right market condition to come where gold and silver rip it. We're not there yet. It may still take some time, but right now that's how we are positioned. And if we get lower yields or sideways yields, watch to see what gold and silver does. If they rip to the upside, then you probably have your answer. And obviously we'll go over it when that occurs. CRB index down a little bit. Again, it's not a huge selling pressure day. It's not a reversal candlestick. We've broken the pattern to the upside. Everything looks okay. The CRB to S&P 500, just a small down day today. So again, I think we are going to go higher over time. Yields are really holding everything down. And maybe that's done on purpose because we are on top of a bunch of different patterns in uranium, in oil, in rare earths, everything. And we're getting held down through those interest rates. So GDX selling off quite a bit today. GDXJ, same thing. And SILJ, also the same thing. But when you back out, it's not a huge selling pressure candlestick on the weeklies. It's just moving sideways for the most part. Big breakthrough, you usually get some sort of retest or return move, and then you rip. So I think it's waiting for the right market conditions to come for that to happen. So do not get discouraged until we see heavy selling pressure that continues. Crude oil slightly lower today. That is a bloody nose. That is a continuation pattern generally to the upside. Now, if interest rates were to just rip it, I mean rip it, we could come back, but I think crude oil is positioning itself for hopefully a very big move to the upside. And that's partly in reason why I think interest rates are going up. It is pricing that in already. Nat gas down 2.24. That is also right at kind of this return move. I can obviously clean up these lines here and show you guys something that's a little bit better, a little bit more well drawn in. This is the line that I'm talking about there. You can also take this line, copy it, throw it on the bottom here. So we're in this channel. We've broken the channel to the upside, and we're just kind of sitting on top of it. The path of least resistance is higher with support underneath us. XOP, yeah, you know me, it looks fantastic. Why do I think that? Well, we gapped down, we filled this gap there for whatever reason people like gaps being filled. And we came back up with the momentum coming to the upside. If we go to a 5-day, you can see this move lower and the downtrend being broken and coming back up with a continuation pattern, looking like we could go to the upside. So that's what XOP looks like. It looks strong and it looks like we could continue to the upside. Looks fantastic. OIH, same thing. We're sitting on top of support. If you look right here, so there's your support level. We still may have a little bit of selling pressure here, which we're getting through. And then once that subsides, I think we are going to the promised land at a much higher level than where we are today, moving on higher. All-time previous highs are at $1,500. We're at $340. I think we're going to beat this bull market at some point out in the future. I don't know exactly when that is going to occur, but if I were to guess, late 2020s. It could happen mid-2020s, but we'll see. This is the Sprout Physical Uranium Trust. This looks fantastic, guys. We are right under resistance. This is where I like to load up, and then we are going to rip. I don't wait for the breakouts. The ratios are good. Everything across the board in commodities looks pretty good. Interest rates are going to force money over into these. I think we are going to rip when we get above 18.15. Now, it doesn't mean we're going to get up on top of it and just rip right in the beginning. We're going to come through. We could either rip and go up, or we can come up, retest, and then rip. So let's just be patient here. Be patient. A lot of the companies in uranium look fantastic. So be patient here. So here's URA. Again, a bloody nose. We've broken out of it. Now's the time to look for big moves to the upside. This is it. URNM also doing the same thing. We're breaking out of the downtrend line. This is it. Do I need to repeat myself? I would be looking for potential companies to purchase at this time in URNM. Not advice, but my opinion. I also like URNJ. We've got a nice, good bloody nose. Again, we've broken this kind of awesome trend line that I threw in there. You got to admit, it's really awesome. So you've got kind of a trend line that goes through this section there. We've got another trend line that is going through here. My guess is we are going to rip it at some point, probably in the near future. I would do my accumulation before the rip. That is just me. TAN selling off. We could see a little bit of a down move depending on what interest rates do here. What I would guess, if I were to guess here, we've got kind of another support level there, which kind of coming to the downside. So let's scrap that. We have another support level kind of coming across here, which is a possibility that we could hit. A lot of the times when you get a nice, good, strong, solid move, you come up, then you slowly sell off to the area that you were, and then you rip from there. I think TAN's going to go higher at some point here at any second. Maybe not in a really fast increasing interest rate environment, but after that. COPX also selling off with the rest of the crew. We're up against resistance here. Would I be afraid? No, I would not. I would be looking at potential companies to look for. And I think we're eventually going to break to the upside. We can look at copper, the price of copper, and I'll show you why I think that. Lithium also in a very good location to accumulate, in my opinion. Right here. We're sitting on top of the pattern. It's not going to be here for much longer. So if it's a month or two, maybe that's it. And then when it starts to rip, I don't think it's coming back. Same with REMX. We're right here doing a retest. Very good spot to be looking for it. And then once it starts to go, I think we will go. Again, this is highly interest rate sensitive. REMX likes it sometimes when gold and silver go up. So I think it's just waiting for that potential market condition to come. SPX, we've got a little down day. Again, this looks kind of funky. We've got this big bearish engulfing there. We haven't launched to the upside yet, so there's still the possibility that we can roll over. Same with the NASDAQ. Depends what interest rates do. Watch interest rates. Interest rates rocketing to the upside, that could mean that this is going to get some headwinds. Emerging markets, down today with the stronger dollar and stronger yields. But again, I think this is going higher, higher, higher there. XHB. Now, this is interesting, guys. We're up almost to all-time highs. This is in the face of higher interest rates. We just put a bullish engulfing in. That looks like it wants to go up. The home builders look very strong at this time, and that is good for commodities. Very good. We need to build a bunch of homes, a bunch of apartments. They're coming. They're in the pipeline. That is future inflation. Now, I understand. How are people going to afford these homes? These are going to be the options that people are going to buy. And they need to rebuild the inventory levels. That's where we're at. Move down a little bit. This does look like we could go sideways to lower with this bearish engulfing pattern there. Copper down 2.5%. This is a retest move. We broke out. We came back. Boom, that's a retest. Let's see what we do tomorrow. Let's see if there's a big bounce or if we get some sort of sideways action before heading higher. Interest rate sensitive. Iron ore heading a little bit higher today. And again, I think we're going to go higher on a longer term view. Maybe we even come back to, here or so. But overall, I think we're going to grind higher. Nickel, higher today. Is this support level going to hold and have we rock it up? We'll find out. We'll find out. It looks okay, though. Aluminum down. The interest rates are slamming, but that still looks good to go higher. That is a bloody nose. Continuation pattern. Baltic Dry Index also looking good. Big bullish engulfing last week. I think we're going to grind our way up. Newcastle Coal up 6%. Again, I think we're going to base, go sideways or higher in this. We've got Bitcoin heading a little bit lower. It's still holding together. Just moving sideways here with Ethereum moving sideways. Interest rates. Are interest rates going to yank this thing down with the NASDAQ? I don't know. We'll have to wait and see. We haven't seen the behavior of these too much with the interest rates going up like we have. I mean, we've seen it some, and you can see when interest rates went up, it came back down. Now, this could be a big move to the downside. This could be a kind of a pattern that looks like that, and we could break to the downside. That is a possibility with interest rates going up. And that very well could be the case. So, I mean, that looks like a very good pattern to do that. You get a 1, 2, 3, and you're going to get your break. If you get your break, that's the time to worry. And I'll put the line in here. So it's going to be something on the lines of this line there and kind of this line there. Which way are we going to break? I don't know. If yields go up, I am guessing that we are going to break to the downside. That's my guess. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Everything from the commodity standpoint still looks very solid. And we're sitting on top of patterns. We had a massive move in interest rates today, which could tamper down some sectors. especially gold and silver. But that's what I've got. And I think that we still have strength ahead of us. They are positioned quite well across the board: copper, oil, nat gas, et cetera, et cetera. Uranium looks really, really good. We could see some life-changing gains, moves come in the months ahead and years ahead. So that's what I've got. If you guys need any help, again, finding-value.com. You can sign up there. We have the discount for the coupon code if you'd like to sign up. You get a big discount on a yearly membership if you guys want to do a yearly membership. It's $50 off and more off in future subscriptions. All right, guys, that's what I've got. We'll catch you next time. This is Finding Value.